Hey everyone, Tesla issued a stark warning for car buyers in the US saying that the 7,500 federal tax credit that they're eligible for now could run out on December 31st. In other words, I think what Tesla is trying to do is stoke customer demand. Like, hey, if you're thinking about getting a Tesla car, now's the time to do it because at the end of the year, you won't qualify for that $7,500 tax credit. So go on out and buy a Tesla car. And that's a big deal, right? Buyers can get a 7,500 tax credit on a Model 3 that sells for around $55,000. So that's a big, roughly 15% back rebate on a car that, is priced at 55,000. So that will have a major meaningful impact on consumer purchasing decisions. Of course, already Tesla has also announced several rounds of price cuts across all of its models across all over the world, and that's beginning to have an impact on its gross profit margin, which was approaching 28% and has since declined down to 23.13%. And I would not be surprised if when Tesla reports its earnings later this month that this figure will drop even lower still. So Tesla trying to spur customer demand without actually lowering prices anymore because they've already done so much of that, trying to use a bit of fear tactics, I guess you can call it, telling customers, hey, this rebate is running out. Time is short. If you want to get a Tesla, go out and get one now because you may not be able to get one with that 7,500 discount at the same time in 2024. But what that also highlights is a bit of a concern for Tesla stock investors, right? If that $7,500 rebate is going away at the end of the year, which Tesla says it most likely is going away at the end of this year, what's going to happen to demand for Tesla's cars, Tesla's EVs, right? A lot of demand for those EVs are driven by folks who are expecting to get that rebate because that makes the car less pricey compared to other cars in the same category, perhaps not EV, but in the same category, right? So without that incentive, that's likely going to decrease customer demand further. And so Tesla will hope to make significant progress in lowering its manufacturing costs so that it can then lower the price of the car so that customers can still be interested in buying the car now at an organically lower price driven by Tesla's manufacturing improvements, which they have done an excellent job improving manufacturing, and that's driven, you can see evidence of that in that increasing gross profit margin over the last several years. And so if they can organically develop price decreases, that can be great news. But it is a risk that's pending towards the end of the year. That rebate is likely to expire. Now, already in 2023, Tesla's stock price is up 125%, a whopping increase and surprising to many investors, including myself, considering that Tesla faced a heap of competition here in 2023. It had to offer several rounds of price cuts to stoke customer demand. Its profit margins are falling, and yet the stock price is rising. So that just goes to show the wide popularity of Tesla stock as an investment. Investors are willing to overlook those challenges, those difficulties, and have confidence in Tesla to overcome those challenges and rise to the top. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.